Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, we're back here on the Investor Coaching Show. Paul Winkler along with Evan Barner talking money and investing. And so, Evan, I don't know if you caught this, but there was the Robinhood CEO on CNBC this week and talked about prediction markets. A big thing that's a lot of younger people, just makes me a little bit nervous. There, some of the things that they get into, there are people that are sliding into areas with individual stocks that they're trying to buy and prediction markets and just practices. Bitcoin, trading, those types of things that I just go, man, we have seen this rodeo a lot of times throughout our careers and know that it doesn't end well. And maybe it's best that people lose money in the early days so that they get it out of their system. I think, because when it's really, but I find so often, Evan, when I meet with somebody, and they'll say, man, I wish I met you, 20 years ago, 30 years ago, that type of thing. And I hear that all the time. And I think, well, you probably wouldn't have listened 20 to 30 years ago.
Right.
I typically find people have to get burnt or burn themselves a number of times before they go, okay, uncle, this doesn't work. Because as much as we like to think it's a great idea to learn from other people's mistakes, people typically learn better from their own mistakes, unfortunately. And that's just the way it goes. So one of the things that we find with investment firms is they want to be everything to everybody. And this is what frustrates me so much. You'll have, and I can't think of a fund company, I can't think of an investment firm that doesn't try to do this. We are, the way we approach things is, since we don't represent products, we don't sell products or anything like that, we don't go this direction. But think about mutual fund companies, think about insurance companies, think about investment providers, and normally what you'll find is this, is that they want to offer everything, a suite of everything. We're your one-stop shop for whatever you need.
Yeah.
And the reason they do that is because that's what people think that they want. I think I want just anything that I feel like having on a particular day or anything that I want to do, I want to be able to have. And even when we're talking about different types of services, that can be problematic because all of a sudden you create this little bit of a conflict because when I give advice on something, I want to be detached from the end product that is being recommended so that we don't have a situation where I feel like I have to recommend, let's say, even an accountant or something like that, or an attorney or anybody because they're affiliated with us. I just like having that separation.
Yeah.
And especially insurance products, we talk about, how commissions create conflicts of interest. And people go into banks, they go into insurance companies, they go into regular investment firms, and you're hard-pressed not to find firms that aren't selling that kind of stuff. So they have the Robinhood CEO, and this is the way this conversation started. Check this out.
We get into that and so much more with Robinhood CEO Vlad Tenev, who's at the table this morning. Good morning. Good morning. We got a whole bunch of things to talk about, but maybe we should start there. You're playing in the prediction market space in a very big way. What is your sense of what's going to happen? It sounds like this may go to the Supreme Court, and what the intentionality of Congress really was originally, you think, when they put the prediction market world into orbit, if you will.
Yeah, so allowing people to do this kind of stuff. I mean, that's it's kind of what we're talking about here. What was their intention on allowing people to do this kind of stuff? And I've often made the comment that the regulators aren't necessarily there to protect you and take care of you. But anyway, keep going.
Yeah, I mean, first of all, we're building a financial super app serving our customers across any asset class, any financial transaction, anywhere in the world. So prediction markets is a new space. It really entered the mainstream with the 2024 election.
So it's like the food provider that will give you access to whatever food you want. No matter what you want, we got it. whether it's good for you or bad for you. It's just like one of my sons was talking about. He's so frustrated with the American diet. And he was like, he was kidding. He was talking about, I'm heading overseas. I can't deal with this anymore. You can't get good food. And I said, well, you have to select it. I mean, it's up to you to select it.
Right.
But I get your frustration. It's harder, because you have so much junk that you have to wade through, and you don't know necessarily, unless you're really educated about this type of stuff, what's good and what's bad. But you go in, and the stuff that tastes really, really good is usually really, really bad for you.
Right.
And not having it. And isn't there something to be said, Evan, for not having necessarily access to that?
Well,
discipline's hard.
With freedom comes responsibility.
Yeah, exactly.
And, we like the freedom side of that coin. I want to be able to choose whatever I can, but you have to be willing to live with the consequences of, I'm looking at a hat here on the table. If all you have is Krispy Kreme, your outcome is not going to be the same as if you have protein drinks and salad and all that kind of stuff.
Yeah.
And so you do, and just like investing, I mean, it's still the same parallel. You can buy all kinds of investment products, but you've still got to be responsible for understanding what you're doing and living with those consequences.
And one of the things that, if you look at the world of addiction, one of the first things that you do if you have somebody that's dealing with an addiction with any type of thing, whether it be food, whether it be alcohol, whether it be whatever, is clear the house of it. Get it out of there. And that's kind of our philosophy when it comes to investing is, no, we're not going to even have anything that tempts you to do something that is not in your best interest. It's not going to be there. And if somebody says, hey, Paul, Evan, can you do this? And we'll be like, you're going to have to fire us, because we're not going to be part of the problem.
Right.
And the problem here is we're talking about, in this particular instance, an interview with a person that says, hey, we got everything for you. Whatever you want, we got it.
And the thing that I love about it is it's not only a tool to help traders specialize. Now you can specialize in all sorts of things, right, but it's a great source of information. It's like a compliment to the news.
I think the information piece of it is great, assuming that you believe the information is not being manipulated in some way.
What do you think about it, Evan?
Early on, there was somebody, and I don't recall if it was during the election or not, but someone was placing like a huge bet on some particular political outcome, and the bets were so large that it was starting to skew the odds or something, to where it was starting to muddle the picture of what was reality. And so, a good example is I think he was a special forces soldier that won $400,000.
Yes, I know where you're going.
On the raid in Venezuela.
Venezuela, yeah, exactly.
How to monitor insider trading on some of those things.
Yeah, we were talking about that in our office this week. Yeah. Well, and then there are fund companies. One of the things that you can do to reduce costs in an investment portfolio is when you have securities lending, you can actually take that revenue and offset some of the expenses. And it's interesting, the fund company that does that type of work, there are fund companies out there that take that revenue and pay it back to the end investor. And it's typically what we look for when we're investing, is funds that will pay back that revenue to you, the end investor, to offset some of their visible expenses, because it's an invisible cost. And most fund companies, they'll keep the revenue for themselves. But it was interesting because they were talking about that sometimes the cost to borrow securities can be incredibly high. And when that cost, which is what goes back to you, the end investor, if the investment manager is doing what I think is in your best interest, when that cost is incredibly high, they actually go, oh, wait a minute, maybe they know something that not everybody knows. It's not that there can't be information out there that isn't known, but it's just interesting, that he's talking about that very thing right there. He says, well, what if the information is bad? But wait till you hear what he says next.
Yeah, and that's true. And that's why we're focused, and a lot of talk is about, all these issues that prediction market platforms face. And what we've always been saying is, we're coming into this as a regulated financial services company complying with U.S. laws. And
okay, I want to comment on that. what is he trying to imply by talking about we're regulated, complying with laws? What is he trying to get the end investor who would be listening to this to believe? Evan, what do you think?
That it's safe.
Yeah, that it's vetted.
Yeah.
That the regulators are watching over you.
You're protected.
You're protected.
Right.
Yeah, and my point is, no. They're able to do whatever the heck they want. They're just regulated by just disclosures. But you can do whatever you want. As long as it's on the label, the food label, it's good. And it's up to you to make your choice. But the problem is most people don't have a clue what they're getting themselves into when it comes down to it. And they think somehow they're being protected, and this idea that there is somebody, Big Brother's watching over them and taking care of them. And I would say furthest thing from the truth.
A lot of things get funky when you amalgamate all the offshore platforms.
But here's the thing that I don't know, two pieces to this. One, I don't know if you saw, there was a study done just in the past, it came out in the last 48 hours, at least for Polymark and I think for Kalshi, where they were suggesting that it was like the tiniest group of people are the ones that are winning, meaning
they make up the bulk of the trades.
They make the bulk of the trades, and that most people who are participating are effectively net losers.
I haven't dug into the data in detail. We offer a suite of products. For most of our products, they're self-directed.
It's like they're self-directed.
Wow.
Buyer beware, right?
To me, the response should have been, that sounds like a Vegas casino. All we hear about is the winner, but they're not building those buildings because everybody's making money.
Well, exactly. But the problem is when you're the casino, you don't want to pick on the casino, right?
Right.
I mean, that's really what it gets down to.
And to me, that answer or non-answer highlights the lack of caring about the investor and the outcome for the investor that is inherent in this smorgasbord approach of we're going to have whatever you want, you can have. A parent wouldn't do that to their child.
Yeah.
You care about your child, so you help select good things for them to eat or good schools to go to and so forth. And just that answer highlights the fact they don't care what happens to the investor.
But they have a product, Evan.
Yeah.
To answer that, and that's where he goes next.
We offer a suite of products. For most of our products, they're self-directed, which means we're not telling people what to trade. We're not making recommendations.
Right.
We do have some products that we take on a fiduciary responsibility. We trade on behalf of our customers. Right. For example.
Okay. So you go to this physician's or this medical practice, let's say. Let's just use that metaphor. You go to a medical practice, and in room A, they have bloodletting. And in room B, they've got the snails or whatever, that are sucking your blood. The leeches, that's it. Yeah, this is not...
Snails.
Snails. Yeah, it's been a while since I've been to a medical practice that did that. And then in room C, we got the doctor. And we know that the doctor is going to benefit if you go to room A or you go to room B. But, you might come over here to room. And my question is, would you trust such a medical practice that gave you, and then in room D, they've got the cigarette machine.
There you go.
I mean, would you trust that they're going to take care of you in room C? I don't know that that's the case.
Robinhood Strategies, which is our digital advisor. We also have human advisors through Trade PMR. But I think you can slice and dice this data in many different ways. And the thing that makes it difficult with these types of derivatives markets is sometimes it's hard to look at them in isolation. You don't know if that person is hedging, if they're speculating, if they have other positions elsewhere.
Yeah, that's real likely. That's real likely. So you got a stock over in brokerage firm A and you're hedging it with a brokerage firm B. Are you kidding me? I was incredulous as I was listening to
Well,
that.
and he's talking about prediction markets, isn't he?
Well, no, he was talking about if you have, in general, all the suite of products that they have. You might have an options contract or put contracts that you buy with his firm, but you're doing a put option. So if you don't know what a put option is, folks, put option is where you protect yourself from downside risk. They're very, very limited use because when you start jumping into options contracts to hedge your position, in other words, you're worried that a stock market is going to go down. So what you do is you buy a put option so that you can actually sell it for a certain price that and if it goes, let's say you buy a put option to be able to sell a stock for, I'm just going to use an individual stock just to get this concept. So you own a stock that's selling for $55, let's say, and you buy a put option to be able to sell it for $50. Well, if it plummets down to $30, and it goes down to that value, you bought the put option that allows you to sell it at 50. So you've protected some of your downside risk. And the problem that you run into is when you protect yourself, you hedge yourself on the upside or on the downside, because of the cost of options, you basically take away the upside return of the stock market that protects us from inflation historically. You're just defeating the purpose when you do that. But let's say that you were a CEO of a company and you had most of your net worth in the company that you're the CEO of.
Right.
You might buy a hedge, you might hedge that position to protect yourself, but that's a very limited use case for that type of thing. But he's making the point that you got the stock over in brokerage firm A and you're going to hedge it with Brute. And I'm like going, you got people listening to this show that have no clue what he's talking about. And, that sounds plausible. He had an answer for this person. And I'm just shaking my head going, oh, man, spare me. And then the lady that's on CNBC, she speaks up next.
There are a number of studies that show that retail investors are at a disadvantage because of the activity of algorithmic bots in this market. Is that a concern of yours? I mean, the bread and butter of your platform is helping individual investors.
Is this bothering you at all that maybe your bread and butter client is getting whipped by bots out there on the internet when it comes to trading this stuff?
Right, and are you setting them up in a situation where the odds are stacked against them to actually make money because of maybe it's a lack of guardrails
right.
Yeah.
Yeah, I mean, I think that the algorithmic bots are a relatively new thing with a lot of these AI tools that are coming on. You actually are starting to see some retail investors writing these themselves,
Yeah, I know. The average person out there, they're writing these bots and they're writing these programs, the algorithmic programs themselves. I see it all the time, don't you, Evan?
Absolutely.
They'll ask Claude or Codex to generate a strategy for them. And we're thinking about, okay, right now you have to be like a quant or an engineer to do this, but can we make it so that everyone can have access to this powerful technology? Let me ask you.
Yeah, there you go. So we got another product we're going to sell down the line. We're going to get a technology to allow other people to do that. Now, here's the problem with the way markets work before we go to break here. The problem is if the general public gets access to this type of information and they can do that, what does that do? Adam Smith said in the 1700s, if you get ease of information and ease of transaction, if you increase the amount of information that one size has, and of course we already have ease of transaction, then you have a market that is really tough to beat. So basically you have markets that are more efficient, not less efficient. So this works even worse when that happens. And that's basically what is being sold here. Hey, just a note to you podcast folks, we just came out with a retirement income guide and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement, real estate, life insurance as a retirement investment, and annuities and interest-bearing accounts and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. what's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. All right, back here on the Investor Coaching Show, Paul Winkler, talking money and investing. And yeah, you know what? Well, do we do that, Evan? Now, do we wait? Let's do that. Actually, let's do that. The AI conference. Because Evan's talking to me during the break. Hey, you want to talk about that thing? Because I was telling Evan about something that happened this week, and I was floored. Because a topic of conversation that comes up continually on this show is AI, Paul. AI. What do you think? What's going to happen here? People worry about it taking their jobs and so on and so forth. Well, there was a big conference, and they were talking about AI, and it's a small. I say it was a big conference, but a small number of people, but a big conference in terms of who was there. But this is what they had to say.
2030, probably robotics will be ubiquitous, and we could be on the verge of the age of abundance. That's wonderful. I would say there were also two big attitudinal shifts last year.
I mean, good that it could be the age of abundance. I mean, you look at that as an investor and you go, oh, that's pretty positive. But check out what he says next.
So this conference, it's small. It's about 50 people. It's the leading AI entrepreneurs, modelers, the people who are actually building the models, overseeing their deployment, people who are using AI in the fields of medicine, biotech, right, the whole 9 yards. So you got the best of the best in that room. The big attitudinal shift, I would say, is last year, I would say 20% of that room was in favor of government regulation. This year, it was 80%, including the head of one of the largest model companies who said, I can't believe we're not regulated. I can't believe that no government is regulating us. We need to be regulated. So,
I mean, just the implications of that. When do you ever hear a practitioner in an industry going, please stop us before we hurt somebody?
Right.
Because, it was funny because the guy that used to be a producer here at the station used to produce my show here. I've worked with him for years, and he'll send me stuff from time to time. And he actually had AI comb our site.
Oh, uh-huh.
And look at what would I recommend? What would Paul recommend as how you invest?
Oh, uh-huh.
You know the results of that, Evan?
Hopefully it was diversify and rebalance.
Wrong. They were wrong. I mean, literally, they were wrong as to what we would have somebody do. And I thought that's interesting. You think, you go out there and you try to use AI to your benefit, and how often is the information just bad? So you have this group of like 45 people, but this is the one that really got me. This is a statement that he said next that, I mean, he's sobering. Just listen to this.
And then someone said, okay, how many people in this room believe you have a soul? No more definition than that. Right. From that. Out of the 50 people in that room, how many do you think said we have a soul? 48. People have a soul.
48.
I'm going to go low.
Okay. What's your number?
10%.
You're right. It was 5. 5 out of 45 said we have a soul. Now,
and that's who's deciding the future of human.
But just hold it. You have to realize these are the smartest scientists, mathematicians, physicists in the world who've risen to the top of their game. So how did they get there? They got there because they're pursuing the scientific method, right?
Yeah, and the scientific method, I'm going to tell you so often, is just plain wrong. In so many areas, I could go on. That's a pet peeve of mine, how often science has been wrong when it comes to, I'm not going to even go there right now. Tremendously frustrating that these people, though, believe they don't have a soul. I mean, what stops them from doing whatever they want to do? You have to be super careful with this stuff. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.